Yo.
Hello.
What's up, brother?
What's going on?
Going crazy, just fucking connecting people.
That's good. I like it. Seem excited. It's a good
Yeah,
thing.
it's gonna be dope.
So let's jump into today's episode, okay? We have spoken about in the past of remaining invested versus not being invested. Now, crypto had a huge rally over the last 2 days, okay? Ethereum is up, as of us talking right now, 18% in 2 days. Yesterday, it was up 12%. So Ethereum was at 1320 yesterday. As we're recording this, it's around 1570, right? That's a pretty violent and fast move. And I've spoken to you before about when you see something jump and it's kind of hard to buy, right? And then it just kind of keeps going. And we've also said on the podcast before, we've talked about passive investing. And I'm going to butcher this quote, but one of the quotes in my mind is just like, all of the returns in the market happen in like four days in a year or something like that. And if you strip those out, you kind of underperform or you don't even participate in those returns. Now, I know crypto is down huge, so somebody could say, well, how can you say that? But the point is, let's take it from where it is now, and it just rallied 18% in 2 days, right? So this might be a rookie conversation for the pros out there, but I think for a lot of other people, it would be good to just review some type of 4 types of orders that are accessible to everybody, and usually only traders know, because it's very easy for everyone else to use them. They just don't know about them, right? And I wanted to just spend 5, 6, 7 minutes and explain those to people because I think it's a good use case right now. So when you're placing an order on whatever platform you use, when you're inputting that order, you either have the option of putting a market order in, a limit order. Most people know the differences between those two. But then you also have something called a stop loss order, a stop limit order, a buy stop order, or a buy stop limit order. So first I'll ask you, do you know the difference between a market order and a limit order?
I do not.
Ethereum right now, let's call it 1570. You want to buy 100 Ethereum right now, right? And you put it into market, you're going to just buy it at 1570 and you're done. That's it. Market means buy or sell at the market price, and it's going to be executed immediately. Now, if you're saying Ethereum just went from 1320 to 1570, I want to buy it, but I wish I had bought it at 1500. And I actually think because it's gone up 18%, it may pull back to 1500 over the next week. Now I can take a buy limit order and I can place my 100 at 1500 and it just stays there. If Ethereum keeps going, you're not going to buy it. But if Ethereum comes down and goes through 1500, then you're going to be executed on your limit order. Let's take for granted tomorrow Ethereum does pull down to 1490 and you are executed on your 1500 limit buy order. Now you own 100 Ethereum, okay? But then you say, look, I actually don't want to lose more than 100 points on this thing. So if it gets to 30, because I just bought it at 1500, but if it gets to 1400, I want to sell it back out. So that's what people call a stop loss order. So once you own something, you can put it in a stop loss. So you can place an order that says at 1400, should Ethereum hit that price, sell my 100 Ethereum at the market.
Got it.
If the market is moving fast, and because it's a market order, it doesn't mean you're going to get filled or executed at 1400. You might get executed at 1395, 1390. If something crazy is going on, let's say China sends a nuke to Taiwan and it just goes whoosh, you might get executed at 1300. You understand? 100 points. Yep. Okay. So because of that, to limit against that.
That's because somebody has to be willing to buy at that price. So if nobody's willing to buy, right, at 1400, you're not getting filled.
That's right. Correct. So to limit or protect yourself somewhat against that is you can put in something called a stop loss limit, which means you enter 2 prices. You say, I want to stop myself out at 1400. Should Ethereum hit 1400, that will be triggered, but my limit is 1390, meaning I will not sell it at any price below 1390. So what's the advantage or disadvantage of that? The advantage is, you're not going to get murdered on some kind of fill that you don't want, which has happened in the past. I've traded through the flash crash, which was absolutely insane. Now, the reason I went through all that is because I think something that's very useful to somebody right now, because I've told you about this, is something called a buy stop. Now, most retail investors have no clue what a buy stop is and how they can utilize it, but this is a situation where you can. Now, a buy stop is usually in place for somebody who is short a stock or short crypto, meaning if I'm short Ethereum and it just went from 1320 to 1570, maybe I had a buy stop in at 1400. It's just everything I said, but the opposite. Because I'm short, I lose money when it goes up. And so I could have stopped myself out by buying it back, which closes my position, right? Same thing with a buy stop limit. I could say buy stop 1500, buy stop limit 1510. I'm not going to get executed more than 10 points away. That's bringing me all towards the buy stop, which people can use to initiate positions. You're not involved in Ethereum and it's at 1570, and you want to ensure that you're not going to miss the move. Okay, so let's just pick an arbitrary number. Let's call it 1600 since we're close to that, because you're still scared that this might be fake and Ethereum still may go back down to 500, right? You still want to buy those 100 Ethereum. So what are your options now? You have 4 options. Number 1, I can buy it at the market. Now I own 100 at 1570. I can place a limit order below the market at 1500, and I can sit there and wait until price comes back down to my limit. I can put a buy stop at 1600, meaning I don't own anything unless it goes to 1600, at which point I am then going to buy it at the market. And lastly, the buy stop limit, which means I can buy it at 1600, it'll be triggered, but I'm not going to pay above 1610. So anybody who's nervous about missing out on the run, you can go ahead on all the names that you like, and you can just place buy stop or buy stop limit orders in your brokerage account, and you will be executed when those prices hit. And you don't even have to look at it anymore.
What tools do you use for crypto to do this?
You should be able to put those orders in on any platform. Now, the simpler platforms like, say, Coinbase, usually have 2 versions. It's usually called like Coinbase and then Coinbase Pro or Trader Pro, or these, and they're geared towards traders and they have more sophisticated options. But these, which sound sophisticated, like when you start telling somebody I'm placing a buy stop limit order, they're like, I don't know what you're talking about, right? But I just explained it to you. And it's literally just a drop down option, and you select it and then you put the price in. So once you've done it once, it's actually very simple. There are also tools, and I love TD Ameritrade Thinkorswim, which is an application that you can download for free from Ameritrade, and they offer you a paper trading login, and you can practice all this stuff and with fake money if you're uncomfortable doing it for the first time with real money. But all your platforms out there have these things. You may just be on the dumbed down version, and you may just have to opt in to the pro or trader or whatever their name for it version is. And then all these options will be made available to you. And the last thing I'll say, how do you know which price to say, I now want to go place a buy stop, right? One of the simplest things in technical analysis is support and resistance. And since we're talking about buying something on the way up, if you picture a wave in the ocean, it goes up and it crests and it comes back down to the point where it started, right? If you go look in charts, they move in waves. If you just go and pick a wave to the left of the chart that you're looking at, and you're saying at the crest of this wave is where I want to own this cryptocurrency, and we just use 1600, you can place a buy stop at the crest of a previous wave, and that's a good spot, keeping it simple, to put a buy stop in.
So what do you recommend, not to anyone who's listening, but to me personally right now?
I recommend you having buy stops in on the coins that you, did you sell all your coins, or did you just stop buying?
I'm sitting right now on just USD.
Yeah, and you used to own Bitcoin, you used to own Ethereum,
and
you used
Solana.
to own Solana, you used to own Matic, and you used to own Cardano.
Just those 3 basically.
So then my advice would be to have buy stops in on Bitcoin, Ethereum, and Solana. And then we would go to the charts and we would pick out those levels. You would enter those orders and you're done. There's nothing else to do. They will.
So I actually think what will be super helpful. I don't have the time to do it now, but I would like to actually record you walking me through it.
Yeah, we could do that. We can do that on another podcast that we don't have a guest, and that's fine. And
Cool.
so
I
if
think that's what we should
people,
do.
what I'll offer people and put this topic till we move on is if you're listening to this and you have questions, whatever platform you're on, post a question and I'll respond and I'll help you through it. Or if you're curious about levels, such as what levels would I be placing my buy stops on a particular coin, post it. I'll take a look at it and I'll let you know. And I'll take a screenshot, hopefully, if I can, and show you why.